Students, 5 minutes, I'll be there. Good morning, students. Very
Good
good
morning,
morning,
sir.
students. Yeah, you guys have to give me a little bit time. My system got crashed. Uh, it's not turning on. I'm on my mobile, so I just got another laptop. It's updating the Zoom. So just give me 2 minutes. I should join anytime.
Yes, sir.
I think I'm there. Yeah, so we are pretty much there. We're completing this chapter. So long. I think last class we discussed the pension part. Okay, we are almost done. Let us discuss today the voluntary retirement scheme. Right. So the next topic that we are discussing is voluntary retirement scheme. Just give me a minute.
Just taking time to get my files.
Good morning, sir.
Very good morning.
Sir, you haven't shared the answer for the question I asked you that day. You gave one question for practice, right?
Ah, is it? Okay. Today we'll share it. Yeah? Fair enough. Okay. So, pretty straightforward this one. No big deal here. Essentially, what we are saying here is that voluntary retirement scheme, voluntary retirement scheme in the sense, okay. Uh, See, there are many ways of looking at it. Now, when you become 60 years of age, or you become a senior citizen, and as per the employment agreement between you and your company, after this age you have to retire. Okay, there will be company policy. As per that policy, after so many years you have to retire. That's called superannuation. Okay, resignation is when the company wants you to stay but you want to leave the organization. That is resignation. Okay, then you have retrenchment. Retrenchment means you want to stay, the company wants to send you out. That is retrenchment, or firing, we call it fire. Okay, firing. Okay, then the fourth category is voluntary retirement. Voluntary retirement is a scheme under which, okay, the company gives you an offer, either you can stay or you can leave. If you want to leave, we will give you a compensation. So no, not necessary to leave, but if you leave, we will give you a compensation, is what VRS says. So what is that VRS scheme? Let us see how it works. Okay, VRS can be offered for anyone, but the compensation and the exemptions are like below. Urmila, can you read it for me? Urmila, can you read it for me? Yeah.
List of the below is exempt.
Hmm?
It is the actual amount of compensation available, rupees 5 lakh.
Hmm?
The highest of the following: last drawn salary into 3 into number of fully completed years of service.
Mm-hmm.
Last drawn salary into balance number of months service left.
Okay.
However, one point is must notice that this exemption is available only once if it is availed in any assessment year. It will not be availed for any other assessment year.
Right. So it must
Guidelines rule 2BA.
be. Hmm.
Shall I continue, sir?
Yeah, continue. Hmm.
The scheme should be applicable to an employee who has completed 10 years of service or has completed 40 years of age. This
Okay.
requirement not be applicable in case of amount received by an employee of a public sector company.
Okay.
It should apply to all employees, including workers and executives of company or of a company or of a cooperative society,
Okay.
as the case may be,
Okay.
expecting directors of a company or of a cooperative society.
Okay.
The scheme of voluntary retirement. Separation should be drawn to result in overall reduction in the existing strength of the employees. The vacancy caused by voluntary retirement is not to be filled up, nor the retiring employee is to be employed in another company or concern belonging to the same management.
Okay. So any questions there? So basically what we are saying is that this scheme must be not given to one particular employee. It must be given to a team, to a branch, to a department, like that. Once you have given the VRS, the person should not be offered anywhere else the similar job. Similar job must not be offered anywhere else, okay, within the same organization. Okay, that is the second condition. And the person must have either completed how many years of service? It must be offered to whom? To a person who has already completed
10 years.
10 years, or should have an age of
40 years.
40 years or more. Then only this particular scheme is applicable. Now, the question is, fair enough, everything is fine. Then how much is the how much will be the exemption? Okay, what will be the exemption? Can you just read it out for me again?
Exemption, sir.
The exemption.
It is the actual amount of compensation available. rupees 5 lakh,
Hmm.
or last on salary into 3 into number of fully completed years of service,
Mhm.
or last on salary into balance number of months service left.
Okay, is that fair enough? Okay, so can you do one problem if I give you to calculate? Can you try? Keep that provision handy. Please keep that provision handy. Guys, I'm so sorry today. My mouse is not working. It's causing a lot of trouble for me today. Okay, let's see. Yes, you can solve this problem. Please try.
Sir, can you show me the provision once?
Okay. There you go.
Thank you, sir.
You can take a snapshot. Where is it? See my mouse. I'm not doing anything. It's all happening on its own. Oh, that's so bad. Yeah, try now.
So it is mentioned here last drawn salary into 3 into number of fully completed years of service. So what is meant by fully completed years of service here? Because in question it is mentioned 23 years 7 months.
So that's what I
So
think
it will be
last class
23.
in the last class we discussed that.
Sorry.
In the last class, I think we discussed that fully completed years
So
of
in
service means,
gratuity we discussed.
yeah, same thing applies here. That means what?
So sir, in gratuity when it is covered under Gratuity Act, it was like it
Correct.
is rounded up after 6 months, and if he is not covered under Gratuity Act,
That was not.
the
That was
completed
not.
year, like it
No,
should
no,
be
no, no.
20.
That was not completed year in gratuity. In leave salary, we computed. We said completed years of service. In gratuity, we said that in excess of um, in excess of 6 months or less than 6 months must be ignored, or 6 months more than 6 months shall be shall be considered as full year is what we discussed. So
Yeah,
here
sir, full year that when he is covered under Gratuity Act.
correct. When he is covered under gratuity act, it is just like leave
Yeah.
salary. Correct. Yeah. Yes. No.
So I didn't get sir what is.
No. Completed years of service means it is pretty simple. Completed years of service means have you completed one full year, then it must be counted.
Okay.
That's it. If you have completed in that year, it must be counted. That's all. That means how many years he completed here? All the
23
remaining,
years.
all the remaining must be ignored, right?
Okay.
Sir, here salary is basic plus DA, sir.
Yes, basic plus TA. Of course, it also says that it is forming part of retirement benefits. No, they're saying it is forming part of benefits, retirement benefits. So it must be counted.
Okay, sir.
Today's class will be like this because I'm having a tough time with my old laptop. So how much compensation did this guy receive? This.
So 5 lakh only he will receive compensation because that is the least.
Sorry,
And
say, repeat your answer. Be specific in choosing words. Be very clear in choosing words.
yes, sir. So he will it will be taxable amount will be 3 lakh here.
Taxable amount will be 3 lakh, but you won't get the marks
3 lakh.
unless until you show the workings. What are the other two amounts? You have to
Yes,
tell us
sir.
the other
So
two amounts.
the first is maximum the amount actually is received it's 8 lakh.
Okay,
Maximum deduction is allowed is 5 lakh.
okay.
And the third point is highest of the following, that is highest of the two the conditions are given is 11 lakh 55,000.
Hmm.
So
Sorry, how did you get
so
11
the
lakh
least
55,000?
become the
How did you get 11 lakh 55,000?
because it's the first condition is last drawn salary is 15,000 they have directly given, right?
Okay, yeah,
Into 3
okay,
they into number of completed years is 23 years.
okay. That comes
Yeah,
to,
so it comes to 10 lakh 35,000.
okay,
10 lakh 35,000,
but you
right?
did not take that.
Then the second one, sorry,
Hmm.
yeah, sir.
Yeah,
And the second one is 15,000 into number of the months of service left.
no.
So number of months for me it came to 77 months.
How did it come
Yeah,
77 months?
70
That is where you
because
get
it
the
is
marks.
6 years full.
Sorry, how many
Yeah,
years?
that is 6 years.
Which 6 years you are talking about?
6 years, complete 6 years. It's that is 23 years he has been serving, right?
Yeah.
23 years, 7 months, right? He has
Uh,
served.
uh,
So remaining is 6 years and 5 months, right?
very good. Very good. Too good. Okay.
Yeah. So in 6 years, there are 6 years, there are 12 months, right?
Yes.
yeah, 6 multiplied by 12 plus 5 months of the remaining fourth year. So it
Very
comes
good.
to 77 months. So
Yes.
15,000 multiplied by 77 comes to 11,55,000, which is the
Right.
highest of these two.
Right.
So if you compare these three figures, the least becomes 5 lakh.
Right. And
So
5 lakh
5
is
lakh is,
exam.
yeah,
And your
yeah.
answer
So
is perfect.
yeah, 8 lakh minus 5 lakh becomes 3 lakh. So
Right.
that will be the taxable VRS.
Right. That is perfect answer. Right, students. You're okay, Monisha, Urmila.
Yes, sir.
Urmila, any issues? Urmila. Urmila, okay? Hello.
Yes, sir.
Right. You're okay with the
Yes, sir.
calculation? Yes. Right. So can you try one more problem on this? One more problem. Try this. Let me give me 1 second. Why don't you try this? Yes, what's the answer? Yes, guys, what's the answer?
Sir, 2 lakh is taxable here.
Hmm. Are you
So
sure?
shall I
Yeah,
tell you?
yeah, sure. 2 lakhs, right? Okay. What about you, Manisha?
Yes, sir. 2 lakhs.
Can you tell me the numbers?
The first one is actual 7 lakhs. Then maximum is 5 lakhs. Then highest of 22 lakh 50,000 or 20 lakhs.
How did you get
Then
22 lakh 50,000?
that is 25,000 into 3 into completed years, that is 30.
30, okay.
Then second one is 25,000 into 80 months.
80, how?
6
So
into 12.
72 months.
How? 6 into?
6 into 12
Uh,
plus remaining
why?
uh,
Why remaining?
30
Which
years, 4
remaining?
months of service, no sir.
Where? Which 4 months are you talking about? Which 4 months?
The completed years.
They clearly told when he is going to retire. When he is going to retire?
6 years.
What, Manisha? When will he retire?
He still has 6 years of service left.
6 years means how many months?
72 months.
That's all. Matter is closed. Why are you again adding? They clearly told, no. After today, after 6 years, he will retire. That's all. Did we say that after 6 years, December, he will retire?
No, sir.
Not necessary, right?
Yes, sir.
We got the logic?
Yes, sir.
Compare the words of the questions, the previous questions and this question. Are you getting it? Here it is just 6 years. 6 years means 6 into 12, that's all. Right?
Okay, sir.
Right, guys. Okay. So today we will again see something called the next provision we'll see is called retrenchment compensation. Okay. The retrenchment compensation also similar to this. Okay. So maybe I will ask today Monisha to please read it out.
Yes, sir. Retrenchment compensation. Retrenchment compensation 1010B. Retrenchment compensation received in accordance with any scheme which is approved by the central government is fully exempt from tax.
Right. So please understand here that when some companies are closed, okay, like the HMT company, okay, watchmakers. I don't know if you know or not. If you'll find if any old people in your home are there, you can ask them. They'll be having HMT watches and all. Such companies are like shut down, right? When they're shut down, when they're closed, the employees are sent. So the company has to give a compensation. This compensation sometimes the government decides. If the government decides the compensation and if you pay, then whether private employee or government employee, since the government has decided that whole amount in the hands of the employee is exempt. Is that clear?
Yes, sir.
Right. Now, many other companies, okay, even software companies also, okay, sometimes they retrench, they fire, okay. When they fire their employees, the government and all is not involved because government will tell very basic amount. They are paying very high. The compensation amount that they are paying is very high, right? Then the exemption will be based on the following. How? Please read it out.
In other cases, least of the following is exempt. Actual amount calculated as per 25F of Industrial Dispute Act 1947. That is 15 days average pay for each completed years of service or part thereof in excess of 6 months.
Right, 15 days salary or part thereof in excess of 6 months. Okay, for each completed years of service, you know how to do the calculation, right? 15 days, 15 by 26, that calculation. Just like it is similar to your Gratuity Act, payable under Gratuity Act, similar to that. Okay, then next one is
Amount notified by central government, that is 5 lakhs.
very good. And
then actual amount received.
Actual amount received, right? So this is how the amount will be taxable. The out of these three, whichever is the lowest will be allowed as exemption, right? Now, my dear friends, please go ahead and try to solve this below problem. Pretty straightforward. Urmila, you will tell me. It's a 1 mark or 2 mark question. How much is the exemption?
Exemption.
Sorry?
Exemption, sir.
Yeah. Mr. Clever is getting 8 lakhs. How much is taxable? How much is exempt?
Taxable is exemption is 5 lakh rupees, sir.
Okay. 3
Taxable is
lakhs
3 lakh
is
rupees.
3 lakhs. Manisha, do you agree?
Sir, 8 lakhs is exempt
Why do you say?
because it is approved by the central government.
Right. You are not seeing the provisions properly.
No, sir. But
Hmm.
like if it is approved by the central government, also 5 lakh is given, no, sir. Amount
No.
notified by central government 5 lakh.
No. No, the first sentence clearly says fully exempt from tax.
Okay, sir.
Right? So you have to be very, very careful about it. Okay, what about the next one? It is approved by central government, fully exempt. What is the next one?
Was retrenched from service of Bosch or limited retained compensation receipts. And this is for license.
Yes.
4,75,000 is taxability, sir.
4,75,000 is?
Taxable.
How much is exempt?
No, sir. 1 lakh is taxable, sir.
Huh?
1 lakh, sir. 6 lakh is received, sir.
Hmm.
And that 5 lakh is exempt.
Hmm.
And remaining 1 lakh.
They're not
Amount
reading the provision properly. 3 amounts are there. First one is amount calculated as per Industrial Dispute Act. How much is that?
4,75,000.
Amount notified is how much?
5 lakh.
Amount received is how much?
6 lakh.
Out of these 3, which is the smallest?
4,75,000.
Then that is exempt.
Yes, sir.
The remaining, why you are getting confused unnecessarily? Huh?
Actually, I didn't read that last
Ah.
provisions.
So be very careful. Okay,
Yes.
right? So how much is taxable? 1,20,000. These are all 2 mark questions. All 2 mark questions. Small questions. MCQs are asked. Multiple choice questions and 2 marks questions are asked. So be very careful. Here only you will get the marks. Okay?
Sir, I
So
have
be
one
very
doubt,
careful.
sir.
Right.
Sir, what is past part thereof in excess of 6 months?
Absolutely. Here they are, let us say, instead of giving amount calculated as per Industrial Dispute Act, they have given 4,75,000. Instead of they gave 15,000 rupees monthly salary, then how will you calculate?
15,000 into 12, sir.
Sorry?
15,000 into 12.
No, 15,000 into 15,000 divided by 26 into 15. You getting it?
Divide by 26 into 15.
Divided by 26 into 15. Right? Why so? Why is that like that? Because they are saying, I told you already, Industrial Dispute Act. It is as per that act. The calculation happens like that. So, monthly salary So how is that done? Monthly salary divided by 26, that is 26 days. That means per day salary I got into 15. Now this is 15 days salary. For how many years? For what, Manisha?
for completed years or part thereof in excess of 6 months.
Right. So if I completed 30 years, 5 months, then
30 years.
30. If I completed 30 years, 8 months, then
31 years.
31. That's what it means. Over.
Yes, sir.
That's it. Right. So with that, retrenchment compensation is over. Okay. The answer is right. 1,25,000.
So,
Okay. Yeah.
like now we have given the example as 30 years and 8 months, no, sir.
Uh,
If it is less than 30 months, then, sir,
30.
if the years of completion is 25 years, then we have to put 25 years, sir.
25 years.
Yes, sir.
Right. Now, the next part we are discussing is provident fund. Please understand this provident fund. Okay. Provident fund is a very, very important component of salary. Very important component of salary. It is given to it is a saving for the employee which he saves during his employment, and he gets as a lump sum at the end of the at the time of his retirement. Okay, this amount, okay, in any employee's life is a very big amount. Okay, and this is used very properly for their future, for their retirement and all retirement plan. So the taxability of this amount is also very critical. Okay, this is where you should understand very properly how this thing works. So now the taxability I will tell later. First of all, I will explain you the what is this provident fund. I will explain. Okay. For example, let us say Monisha gets a job. Okay, she finds a job. Okay. Now let us assume her basic salary. Okay. Forget about other things. Her basic salary is 25,000. And the DA they are giving is, let us assume, 5,000. So she's getting 30,000 rupees of salary. Only these two components. Now, the employer has to every month deduct, this is per month, deduct, just let me turn on the fan. The employer every month may deduct some amount from this salary. Okay, so let us assume the employee deducts some 3,000 rupees, right? And he deposits this money in a PF account. PF account is just like your bank fixed deposit account. Okay, in the PF account, this amount is deposited, this 3,000. Getting it? And Monisha will get in hand how much? 27,000 rupees. Following it?
Yes, sir.
Now, like this, every month it happens. So every month means into 12? Into 12? Make sense?
Yes.
Yes, sir.
Let us assume Monisha's salary does not change and she works for another 25 years, then this amount will be there in this account? Yes or not?
Yes.
Following it or not?
Yes, sir.
Yes, sir.
This is called employer's contribution. This is called employer's contribution. Make sense? Sorry, employee's contribution, my bad. Employee's contribution. That means what? Whose salary? Whose salary? Monisha's salary. Is the employer saving this money? No. From her salary only, the employer is deducting the money and saving in the account. Who is saving ultimately? Who went to the bank and deposited is not important. Whose money it is? It is Monisha's. It is Monisha's money, so this is called employee contribution. Make sense?
Yes, sir.
Right. Second part. The best part about PF is that the employer also deposits a similar amount. The employer also deposits similar amount. Okay, how much he deposits? 3,000 into 12 he will deposit every year. Let us assume Monisha works for 25 years without change in salary, then into 25 he will also deposit. Are you following it or not? This is called employer contribution. Does that make sense?
Sir.
Right. Then the PF, as I told you, it is similar to a bank account. Similar to a bank account. So the bank gives interest. Let us assume how much interest it gives on this whole amount. It gives some, let's say 8% interest it gives. The interest also is there. Now all these three amounts together, okay, all these three amounts together, okay, will be received at the time of retirement. Does it make sense?
Yes, sir.
So can you roughly calculate how much is the amount? First let us calculate this. How much is this?
9 lakhs.
This is 9 lakhs. This one is 9 lakhs, 18 lakhs. Okay, direct, because it is a recurring deposit, you will not get directly 8% on 9 lakhs. Correct? Yes or not?
Yes, sir.
Just assume around 6 lakhs of interest. Just assume. Are you getting it? So total how much? Total how much?
24.
24 lakhs. Okay, directly you can't calculate because this is deposited monthly. Interest is also given, monthly interest is given. So it will directly, you can't calculate. Okay, so how much? We are talking about how much? Around 24 lakhs. Okay, 24 lakhs of total amount the employee will receive. So is this taxable is the big question, whether we should tax this amount or we should not tax this amount. Make sense?
So
Hmm.
the interest, like you have given us, sir,
Hmm.
that is 3,000 into 12 and 3,000 into 12, no, sir.
Yeah, 6,000 into 8% per annum. So into divided by 12. This is per annum is for 12 months into 1 month into 12. Okay, if you do into 25. Okay, but you can't calculate like that. Okay, you can't exactly calculate like that because they will give interest on accumulated amounts also. First month this is the interest. Second month the interest will be on 12,000. Are you getting it? So you can't calculate like that. So don't get into the calculation part at this point of time. They will give they will give interest on the amount that is totally available, but they will give interest on both. If your question is whether they will give interest on both, the answer is yes, they will give interest on both. Getting it, guys? Yeah, Urmila? Right, Urmila?
Wait a minute, sir.
So this is overall they will get, let's assume he gets 24 lakhs. Now, is this 24 lakhs, if we are able to identify the amounts properly, okay, is it taxable or not, we have to discuss. Right now, once this part is understood, there is another part.
The calculation we should do, sir.
Sorry, come again.
Calculation of the
Which calculation?
the PF calculation. Now you did know, sir, in that example.
Interest.
Yes, sir. Not
Again and
interest.
again, Urmila,
How
I'm
did you
telling
say 24 lakhs, sir?
don't, it is 9 lakhs and employee contribution, employer 9 lakhs, interest I just took it 6 lakhs. I did not calculate. I just took it, assume. I've been using the word assume. They will calculate and give. We don't have to bother. The Provident Fund fellows will calculate and give it. Right? First month they will give interest on 6,000, correct? Second month they will give interest on 12,000, correct? Third month they will give interest on 18,000, correct or not, Urmila?
Yes, sir.
So I can't calculate for 25 years. I can't calculate. That's not. I just want to tell you that there is some interest amount is there. Don't get into that calculation. That's not relevant for you right now.
Yes, sir.
Right. So that is, so 9 lakhs my money, 9 lakhs employer's money, and PF gives me interest. Total 24 lakhs. Assume is what I'm saying.
Yes, sir.
This is only to tell you the concept. Amounts are not relevant. Okay.
Yes, sir.
Right. Now, let's come back to the type of provident funds. How many types of provident funds are there? Okay. This provident fund can be of number of types. Okay. What are the number of types? One is statutory. Statutory provident fund. Statutory provident fund is for only for government employees, railway employees, employees working under Ministry of Finance, employees working under state government, they all get, what they get? Statutory provident fund. They will contribute. This is not normal provident fund. This will become statutory, but the scheme is same. It is similar to this. Getting it? Right?
Yes, sir.
Next. Then there is something called recognized provident fund. Okay, recognized provident fund like SBI employees, okay, or employees of a school or a college or anything, okay, those who are working for salary, they have a provident fund of their own. Okay, that provident fund they maintain that fund, and they get their fund approved by the income tax authorities. The income tax authority should approve the fund, that yes, this is a valid fund as per the guidelines given by the government. They are depositing the employees provident fund into that. If that approval is there, it is called recognized provident fund. Does it make sense?
Yes, sir.
Urmila, okay? Urmila, okay?
Yes, sir.
Yeah. The third one is unrecognized. Unrecognized means the IT department has not approved it, but the company is maintaining a provident fund for the benefit of their employees. But it is unrecognized provident fund. Make sense? Right?
Yes, sir.
Right. There is a third one which is not very much related to this, but that is also provident fund. That's called public provident fund. Public provident fund is for people like me who don't work under any organization. They are not into employment, but one day I will also have to retire, right? I should also have some savings in my old age, right? Yes, guys. So there are banks which offer a public provident fund where some amount I can invest from my monthly savings. I can invest like this only. Only thing, employer contribution will not be there. My contribution monthly I will keep it, and they will give interest. When I will achieve that 5 years superannuation, that time limit is over, then I can withdraw. Like they are giving 10 years time. Sometimes they give 10 years to 20 years. I can keep this money. Are you getting it? So after that, they will give me my money with interest. Does that make sense? Right. So, my dear friends, let's understand if for these type of provident funds, what will be the treatment for employee contribution, employer contribution, and interest part. Now, the question here is, here two aspects are there. Manisha's salary was 25,000 basic, 5,000 DA, total 30,000. The employer deducted 3,000 and paid 27,000. So the first question comes, for tax purposes, how much she has to pay? Whether she has to pay tax on 27,000 or 30,000, or 30,000 plus employer is separately giving 30,000, 3,000, that also should be added. Urmila, you are following it?
Yes, sir.
Manisha, yes?
Yes, sir.
Right? So these things are a little bit complicated. So the tax, what is the provisions in the tax? We should be very careful. Why? Because the salary is 30,000, but she receives 27,000. That doesn't mean that she's not getting this. She's getting this. And not only she's getting this, she's getting additional 3,000 also she's getting. So tax must be paid on what is the question. And if we determine this part, this has to be determined for statutory provident fund, for recognized provident fund, and for unrecognized provident fund. Correct? And when the lump sum comes, we have to discuss about the lump sum also, whether that is taxable or not. Right?
Yes, sir.
Right. So, my dear friends, today's discussion. As I told you, my mouse is giving me a trouble. Hold on, please. Please hold on. period of service. Okay, now this is better. Welcome to Provident Fund. Okay, Urmila, you will help me with this. Okay. What is that we are discussing? Yeah, Urmila?
Statutory Provident Fund, sir.
Very good. Statutory Provident Fund. Statutory Provident Fund. What is the next one?
Contributions and credits.
What do you mean by contributions and credits? Let us see. What is the first one?
Employee contribution.
Employee contribution. So, out of Monisha's salary of 30,000, every month 3,000 she is contributing. Is this taxable? That means what? Whether she should pay tax on 27,000 or 30,000 is what we are asking. Is it taxable or not? What do you think? Taxable or not? What do you guys think?
No, sir.
What do you think, Manusha?
No, sir.
Manisha, you get 30,000 salary. That's what your employer has decided. You have accepted the offer, but he gives you 27,000 only. 3,000 you are depositing in the Provident Fund. So you should pay tax on 30,000 or 27,000.
27,000.
Why 27,000? You put the entire 30,000 in the bank. You will pay tax or you will not pay tax?
We'll pay, sir.
And then?
Then on 30,000 we have to pay tax.
It's not like that. Okay, so how much is taxable? Taxable is 30,000 only. But welcome to a topic called deductions. Okay, there is a topic called deductions under 80C. You get this 3,000 as a deduction. Following it, Manisha. Salary, how much you will show? Salary you will show as 30,000. Correct?
Yes, sir.
Then you will compute your gross total income, all the heads. After that, you will deduct this 3,000, saying that, sir, I am depositing money in the Provident Fund, so please give me deduction of 3,000. If you ask, they will give deduction. Are you following it? Are you following it or not?
Yes, sir.
Right? This is a separate benefit given, not directly given under the head salaries, but after calculating the salaries, business income, other sources income, if you claim, they will deduct. If you don't claim, they will ask you to pay tax. Are you getting it?
Yes, sir.
Aisha, you follow it?
So statutory and recognized are the same then, because the provisions are same.
I will come there, whether they are same or not, right? But yes, I will come to recognize, then we will discuss that. They are very similar. Done?
Yeah.
Then, what is the next one? See, that's the problem with my mouse. The next one is the employer's contribution. What about the employer's contribution? Employer's contribution is it, so the 3,000 extra which employer is depositing, is that taxable or not? What do you think, Manisha?
I think it's taxable.
It is taxable. Welcome to statutory provident fund, that is not taxable. Done.
Yes, sir.
Formula over.
Yes, sir.
Right. What is the next one? The next one is interest. Monthly on this amount you get interest. Like you are depositing 3,000, that month they will give interest also. Who will give? Who will give the interest?
Bank.
The provident fund. Let's not say bank. The provident fund will give. The provident fund authority will give. Okay, is that taxable? Not taxable at all. Understood?
Yes, sir.
Right. Then receipts. This happened for 25 years. 25 years you claimed ATC deduction. 25 years the employer gave contribution, it was not taxed. 25 years interest was deposited, it was not taxed. But now the whole lump sum is coming. It will come into your bank account. Now you can use this. Getting it? Is this taxable? So here also what we do here, the lump sum received is not taxable. It's not at all taxable. It's fully exempt. In which case?
Statutory.
In case of statutory provident fund. Over. The 24 lakhs that you will receive, you don't have to pay tax. Urmila, understood?
Yes, sir.
The question is, sir, this is for provident fund. What about recognized provident fund? Okay, statutory provident fund is for government employees. What about recognized provident fund? Aisha thinks that, sir, it seems statutory provident fund and recognized provident fund are same. Let us see if they are same. Yes, you are right. They are same. Contribution and credits are similar, right? So, in like how government employees contribute to provident fund, even private employees also contribute the same way. So, what is that? Employees contribution. Employees contribution, yes, ATC claim can be made. Employer contribution, here is the catch. You should be very, very careful. How much? Excess of 12% is taxable as salary. That means what? How much was our Monisha's salary? How much was our Monisha's salary?
9 lakh.
Come again? How much was her salary?
30,000.
30,000. In 30,000 per month, okay? How much is 12%? 12% is how much?
1,600.
Sorry?
3,600.
3,600. But how much is deposited in the bank? How much is deposited in the bank? In the provident fund?
3,000.
3,000 only is deposited. Was that more than 12% or less than 12%? So how much is deposited? More than 12% or less than 12%?
Less.
Less. So it is fully exempt. Just imagine if the employer deposits 4,000, then what will happen? 400 excess employer is depositing, that will become taxable. Urmila, Manisha, this is very, very important. You understand or you don't understand?
Understood, sir.
Urmila,
Yes, sir.
so you know the salary.
you can calculate 12%. 12% is 3,600, but employer is depositing only 3,000, so no need to tax. But if he deposits 4,000 rupees, then that excess of 400 will become taxable as salary. Following it? So 400 every month into 12. 12 months amount must be added. Right? That's what the provision says. Understood?
Yes, sir.
Next. What is the next one? What is the next branch?
Interest.
Interest part. So what about the interest? The interest I get, the provident fund will give interest. Here, in case of statutory provident fund, it is exempt. It is completely exempt, not taxable. But in case of recognized provident fund also, is it exempt? No, my dear friends, it is exempt only up to 9.5%. If you get 10% interest, then the excess amount will be taxed. Are you getting it?
Yes.
Yes or not? Let us say in a particular month, the amount already in the provident fund, is, let us assume, 6 lakhs is already there in the account. 6 lakhs into 10% per annum divided by 12. How much is that? How much is that?
5,000.
5,000. 5,000 interest is credited. Is this taxable? Is this taxable?
No.
Fully exempt? One more time I will ask. This is my provident fund account. This is a recognized provident fund. It's called RPF, famously known as RPF. In this provident fund, already 6 lakhs amount is there. That means what? I'm already working now for many years. So already 6 lakhs rupees deposit is there in this. So in this month, I got 6 lakhs into 10% per annum. So 1 month means divided by 12. How much did I get? 5,000 rupees I got. Is this taxable or not? What, Manisha?
It's taxable, sir.
Sorry?
I think it's taxable.
Okay. If I show you the provision, can you tell? See the provision? Interest credited 5,000. So here 5,000 rupees is credited. How much is taxable?
0.5%.
So can you calculate that? Sorry? Yeah, Aisha.
So it's an excess of 9.5% taxable as salary.
Correct.
So 9.5% of salary?
No, 9.5% of the interest. 9.5% of the interest is taxable. How can they tax the salary? We are talking about the interest. So you calculate 9.5% divided by 12. How much is that? How much is that?
4,750.
4,750. 4,750, if you got interest, then it is not taxable. But how much you got?
5,000.
So 250 rupees is taxable as salary. This shall be considered as salary. Understood? Urmila, right time to ask questions. Right time to ask questions. If you have any questions not able to understand, right time to ask. Okay.
So this 6 lakh rupees is the credit of interest in my provident fund account, right?
No, this is employer contribution and employee contribution already there. Which is already maintained. No, it's like I told you, this is like a fixed deposit. Already, how much amount is there? 6 lakhs is already there.
So this 6 lakh is what exactly?
I'm very surprised you are asking this question. You are every year you are depositing, no? Employer contribution, employee contribution.
Yes.
That balance. Yeah.
That was 9 lakh, no sir. 9 lakh for employer. At the example we are taking from the beginning is 9 lakh from employer and 9 lakh from employee. And you said 6 lakh take an assumption that is interest. Assumption amount you have taken as interest, right?
That this is nothing to do with the example. This is nothing to do with the example. This is only calculation. Okay, I will tell you what. July 2020, Monisha joined a firm. How much is the salary? 30,000. Employee contribution 3,000. Employer contribution 3,000. Correct?
Yes.
How much is totally there? 6,000? 6,000 there or not? In August 2020, the PF will give interest, right?
Yes.
How much interest it will give? 6,000 into 10% is for full year. For 1 month, how much? Go ahead.
50 rupees.
50 rupees. So this 50 rupees only I am talking about. Don't bother about that is 5,000. This 6 is an example. This is just an example. But this 6 lakhs and this 6,000 are similar. What are they? They are employer and employee contribution as on that date. Following it.
Yes.
Right? On this, is this 50 rupees taxable or not? Is this 50 rupees taxable or not?
We have to find out, sir, 9.5%.
Right. So what you should do, you should find out 6,000 into 9.5% divided by 12. You should find out how much is that.
₹47.5.
47.5. So how much it is excess? This is tax.
2.5.
This is taxable. Understood? Understood?
Yeah, sir.
Now Aisha will ask a question. Sir, this was for August. What about September, sir? In September month, employee contribution was 6,000, right? Why? The 6,000 includes August plus July. Agree. Total amount was there in the deposit, how much? 6,000. And employers 6,000 is also there. Total 12,000. And for September, you will get interest. How much you will get interest? 12,000 into 10% divided by 12 you will get. This is September interest. Are you following it?
Yes.
So like that 6 lakhs
After some years, it will become 6 lakhs, no?
Yes.
So let us say in 2025, the amount becomes 6 lakhs. Following it?
Accumulated amount, yeah.
Yes, thank you. That is accumulated amount. On accumulated amount, how much you got interest? 5,000.
5,000.
5,000. How much is taxable? How much is exempt? 4,750. The remaining 250 is taxable. Getting it? Sir, this is 1 month interest, sir. What about, you can't declare for full year, you want to calculate into 12, into 12. Agree? Does it make sense?
Yes.
What Manisha?
Yes, sir.
Fine. Be very careful about this. So, what happened? The interest credits are taxable in excess of 9.5%. Now, what is the next? Yeah.
Employer's contribution is 12% of the taxable salary.
Ah,
Is basic plus full of TA or only retirement?
retirement. Only the retirement.
Okay, sir.
Right? Ah. Then what do you have? The receipts at the retirement. In the time of retirement, what will happen?
Excuse
What will
me,
happen?
sir.
Sir, yes.
When you say retirement benefit, it means if the condition is mentioned DA, what is exactly you mean with that?
Yeah, retirement benefits. If, see, the employer is depositing some amount, no? Into the, into, for example, in Monisha's case, okay, he was depositing how much? He was depositing 10% of 3,000, right?
Yeah.
So the employer will decide whether to deposit on 25,000 or on 30,000. So if he considers DA, then we will also consider DA. That's it.
Yeah. I had a. Shall I ask this question here or not?
Ask.
That the provision in gratuity while solving the problem you gave, I got confused there. I think the provision was not very clear to me. Like they have said, if the employee is covered under the Gratuity Act, the salary for calculation is basic plus DA.
Yes.
When he is not covered under the Gratuity Act 1972. Then it is basic plus DA if retirement benefit is considered. So in question you have mentioned the basic is one amount and the DA is one amount, and plus 50% of the DA is considered as a retirement benefit.
Correct.
So what we have to take in case the employee is covered under Gratuity Act. The basic plus DA means that
Okay.
not 50%.
Okay. Take my questions or any book questions, any textbook. Okay. If the employer is covered under Gratuity Act, DA must be considered. It is compulsory. Why? Because I am not saying it. Income Tax Act is not saying it. Who is saying it? The Gratuity Act itself is saying that if your company employees fall under payment of Gratuity Act, you have to consider gratuity for calculation of gratuity. DA must be taken 100%. Are you getting it? Does it make sense?
So your voice was lagging. We couldn't hear anything.
Okay. For example, Aisha, let us assume you are my employee. Okay?
Yeah.
Right?
Yeah.
You are my employee. Your salary is 30,000 rupees. 25,000 rupees basic and 5,000 rupees DA. Okay? Now, you tell me the employer is covered under payment of Gratuity Act or he is not covered under payment of Gratuity Act?
I don't know, but if it is not mentioned, I think he is covered by default. I will take it as.
If generally, if it is not mentioned, you will assume that he is not covered.
Okay, he is not covered.
It's not. If it is not mentioned, it is not covered.
Okay, no, I just want to know here that.
No, I did not finish my job. Wait.
Yeah.
So now you tell me I am covered or I am not covered.
You are not covered.
I am not covered, right? So now, for calculation of retirement benefits, DA will be considered or not? Who will decide? Who will decide?
You.
The employer will decide. I will decide. If
Yeah.
I want to give gratuity based on basic, I will give only based on basic. If I will consider DA 50%, then 50% of DA 2,500 only I will consider. My choice. Getting it?
Okay. Okay. Yeah. Yes.
Let us assume I tell that the employer is covered under Payment of Gratuity Act. Now,
So.
gratuity must be computed based on,
Covered.
yeah. Now, gratuity must be computed based on.
Covered under Gratuity Act.
So, in that case, salary must be
Basic plus DA.
compulsory. Why? Because I don't have a choice. I don't have a choice. The payment of gratuity is mandating me.
Okay.
Correct.
Yes. So in this question, it was given like the retirement benefit of graduate this DNS allowances is 50%. So that is for the third part of the question when the employee is not covered under the Gratuity Act.
I did not get it. One more time.
There were three parts of the question, like he's a government employee, he's a private covered under the Gratuity Act, means he is getting the gratuity, and other he's not getting the gratuity, right?
Okay. Yes.
So in the last part, when he's not getting the gratuity, means he is not covered, right?
Right. He's
So
no. Hold on. Let me see the question. Which question are we talking about?
I don't know, you gave in the
Right.
question,
Give me 1 second. I'm going there. This one. We're talking about this.
Yeah.
Yeah. So what is the issue here?
No, my thing is when we take the second part, if he is an employee of a private getting gratuity of 190, here the salary for calculating gratuity will be 54 plus a 3,500, right?
Correct. Of
It is
50% of 3,500.
Yeah, that's what 50% of which is a part of retirement benefit.
Yes.
So here we will take 50% of 3,500 or we'll take 3,500.
50% of 3,500.
Yeah, that only my understanding I wanted to know, because when the employee is covered under the Gratuity Act,
Correct.
the
But he's not covered
salary.
under the Gratuity Act.
Okay, fine. Yeah, okay. So
Makes sense.
it is understanding that it's not that he is getting gratuity means he is covered. It will be mentioned that he is covered under the Gratuity Act.
It has to be mentioned. No, it has to be mentioned. Correct or not?
Okay, if nothing is mentioned, it means he is not covered, and the salary will be if employee mentioned that DA is a part of retirement benefit.
Correct.
Okay.
Right.
Otherwise, the salary will be basic plus DA if he is covered. DA means in that case it would have been taken complete
Compulsory.
500, right?
Compulsory.
Yeah. Okay. The clause is
Right.
very small, but it needs understanding, I guess.
Absolutely. That's why these problems are handpicked. Okay, these are handpicked problems because these cover the provision. You understood the problem, you understood the provision. Right? You're able to solve it, you have understood the problem. It works like that. Okay. Nevertheless, so here we are talking about recognized provident fund. What about recognized provident fund? The recognized provident fund rule is that when it comes to the lump sum amount, the entire lump sum is exempt, not taxed. This is what Aisha was saying. Sir, is it related? It is just like statutory provident fund. Now, Aisha, you answer. Is this is it same like statutory provident fund?
I didn't get. Are you talking about the lump sum received?
No, I'm asking you. When I finished the statutory provident fund. You said, sir, statutory provident fund and recognized provident fund are same. They look similar.
Yeah. No,
So
sir.
I'm asking you, are they similar? Are they same?
No, sir. It is not same now because
Where they are different.
yeah, because here I believe the statutory provident fund is completely exempted from tax. It's not taxable in any of the case like employers, interest, and lump sum. But in the recognized fund, the employer's contribution is exempt to some extent. That is 12% of the salary, and
Right.
interest is also as the same, like 9.5% of the taxable
Right.
salary.
Only two places, recognized provident fund and statutory provident fund, are changing. Where they are changing? When it comes to employer's contribution and when it comes to interest credit. Getting it, guys? Over?
So this lump sum received is not taxable in either of the case. So is it because the taxability is taken care from the beginning, like employer, because time to time the taxability is taking place, right? That is 80C deduction we are getting, and then employers. So in all four kind, it will not be taxable because of that, or the law says?
Sorry, come again. In all?
Like you have given the 4 categories of provident fund. That
Two
is
categories I covered. I'll come to the other three.
no, that's okay. Okay.
Right. I'll come there. But what I essentially I want to tell you is that this is the rule.
No, I'm not talking about like 4 categories. I'm just talking about the understanding part. Is it not taxable because law says, or because time to time the taxability has been taken care? So that's why the lump
No,
sum
see
is
here
not.
it is not taxed. No, the employer contribution is not taxed here. But later they should have taxed. Later also they are not taxing. You can say here they taxed. In recognized provident fund, you can say, sir, above 12% they taxed. No.
Yes.
So that's why they are not taxing here. It makes sense here. But here, origin not at all taxed. Even if it is 20% also, it is not taxed. Getting it?
Yes.
Right. So that's the part here. Now, when it comes to public provident fund, not so relevant for you, but still, okay. The simple part is here, the employer is not there here, right? Contribution and credits, not employee. It is not employee, individual contributions, individual contributions, ATC deduction. Sir, my students pay me fees, that's my income. I am showing that as income. But I am depositing some amount in public provident fund. Will I get some deduction? Yes, you will get deduction. Are you getting it? I don't get salary, but still the ATC deduction I can claim if I save some money in the public provident fund. Following it, Manisha?
Yes, sir.
Similarly, employee contribution does not exist. But interest will I get? Yes. Whatever interest I get is completely exempt. Then at my retirement, will I get lump sum? Yes. That is also fully exempt. Over. It is done.
Sir, this is similar to recurring deposits, no, sir?
This is similar to recurring. Okay,
So,
but recurring deposit do not get ATC deduction. And whatever lump sum you will get, that will be taxable.
Okay, sir.
Make sense?
Yes, sir.
Whatever interest you get, that is taxable. In case of recurring deposits. Okay?
Yes, sir.
Right. Now, unrecognized provident fund. This is the trickiest part. You have to be very, very careful. What about the trickiest part here? So here also there are contribution and credits. Who contributes? The employee contributes. Whatever employee contributes, okay, what is the first thing? You can't get any deduction. You can't claim any deduction. Are you getting it? Guys, make sense?
Yes, sir.
So that means what? If Monisha is covered under unrecognized provident fund, she is getting 30,000. 3,000 she is contributing to the provident fund, but she will pay tax on
30,000.
30,000 only. Make sense? Similarly, the employee is putting 3,000 rupees, correct? Yes? In recognized provident fund, what is happening? What is the rule in recognized provident fund?
12% of
Above 12% is taxable.
Yeah.
Correct? Here, that is also not taxable. It's not taxable. Done? Then interest credits. Interest credits in recognized provident fund above 9.5% is taxable. Here, that is also not taxable. But when it comes to lump sum, then comes the taxability. Okay, how it is taxed? First one, lump sum received, interest part. The entire interest part which you get, that must be treated interest on employees' contribution. On employees' contribution, whatever interest you get, that is income from other sources. Are you getting it? Urmila asked one question. Sir, totally Manisha had 9 lakh rupees for employees contribution and 9 lakh rupees for employer contribution. She will get interest on both, sir? Yes, she will get interest on both. The interest which she will get on her own money, the first 9 lakhs, that is income from other sources. And the interest which she will get on employer's contribution, that is treated as salary income. When? At the time of retirement. Are you following it? Urmila, you are following it? Give me 1 second, guys. I'll put a charge. Urmila, are you following that? Monisha?
Yes, sir.
Aisha, you're getting it?
Yes, sir.
This is taxable under salary. Now, what else she will get? She will get the contributions part also. Sir, this is the interest part you discussed. What about the money I saved? Who saved the money? The employee saved the money. The employer's part, whatever the employer has contributed, that shall be considered as salary. And whatever the employee has saved, that is already taxed. So it is not taxable now. Make sense? Manisha, understanding?
Yes, sir.
Aisha?
Yes, sir.
Right. Trust me, guys. Okay. This comprehensive what is a provident fund table, Okay. Now I'm seeing in some other places, but I would definitely like to take a pride that this is very early. Okay, I prepared this. Okay, very, very useful one. Very, very useful one. Revising it will be very, very helpful. Okay, this chart is very, very useful. Right? Done.
Yes.
Right. We will solve one
Yes,
problem. Yeah,
I have to take screenshots.
please take a screen.
Okay, sir.
So you want to take a screenshot of this, and you also want to take a screenshot of this also. This is for public provident fund. And you also want to take a screenshot of this, which is also equally important. Now, let us take the solver problem. Before we solve one problem, the last part of salaries, okay, entertainment elements separately covered under 16.11, okay, redundant provision, but still it is there. I hope one day they will remove this provision, but as a part of our syllabus, we will discuss that, right? Deduction on receipt of allowance is allowable only to central and state government employees. So entertainment allowances, okay? Generally the district collectors, some officers of central government and all will be there, okay? Sometimes some delegate will come, okay? Bill Gates has come to visit our town, okay? So the district collector will have to treat him, okay? Maybe he will take him to a restaurant, okay? Some dignitary has come, so the government employees will have to spend some money for entertainment purposes. So if they receive any entertainment elements, that is completely exempt. Correct? Is it exempt? Deduction of allowances is allowable only to government employees. So a deduction is available, no exemption, only a deduction is available. How much is the deduction? The deduction has to be calculated as least of the following: 5,000, 5,000. How much is that? 5,000
per annum.
per annum. Entertainment allowance received or 20% of basic salary. Only basic salary, no DA, only basic. Whichever is the lowest is exempt from tax. Similarly, no deduction for private employees. Similarly, 16(3) professional tax, another deduction has been given. What is that? Professional tax deduction has been given where if you have paid any professional tax, the question comes, sir, what is professional tax? Okay, professional tax is charged by the state government, right? So if anybody is working here, you will know that when they give you a salary, they will deduct 300 rupees, 200 rupees, something like that as professional tax, which is not income tax, which is income tax is central government tax. This is state government tax, right? The 200, 300 rupees which you deduct for employees, which you deduct, okay, that's called professional tax. That professional tax need not be shown as income from salary. You can get a deduction of that. For example, the same example, our Monisha's salary was 30,000. 3,000 rupees provident fund gone. The professional tax of 300 rupees also she is paying. That means she is getting 26,700 only she is getting in hand. So she has to pay tax on how much?
26,300.
26,300 only. That is 26,700 only. Why? Because that 300 deduction has been given to her. Make sense? What, Manisha?
Yes, sir.
Right. Next. Similarly, from the last year, they brought something called standard deduction. They got something called standard deduction, which is very, very important. This year, they will ask questions on this. So be very careful. So what is that? A standard deduction of 40,000 is available from total salary of the individual. That means what? After computing your salary, okay, for example, let us take Monisha's salary only. 26,700 into 12 is her salary. From that, minus 40,000, standard deduction. We just give you a standard deduction. Take the benefit. No need to pay tax on 40,000 rupees. Guys, following it?
Yes, sir.
So it is
Right.
40 or 50?
40.
40. Okay, sir. Because this year I paid tax. I got 50. So I don't know.
Standard deduction is 40 or 50.
So this year we got 50. I calculated though.
Let me check once.
Yeah.
So on. Let us check the problem. Was I wrong? Yeah, you're right. It is 50,000. You're absolutely right. So how much is the amount of deduction? 50,000 can be deducted from salary. Nice catch. For salary employees, you have a deduction of 50,000 from the total salary can be deducted. Okay. This is allowed even in case of pensioners also. For pensioners also. In the note I have given you, I think I have put 40,000. Please correct that. Okay, that is 50,000. 50,000 rupees will be allowed as deduction. So based on this understanding, let us solve one problem here. A comprehensive problem. You have to be very careful. Okay. So please let us do together. We will do this. Okay. So once we'll thoroughly read this and then we will solve this. We'll first discuss the problem, then we will do it. Urmila, can you read it for me?
Yes, sir. X retires on June 30, 2019. He submits the following information. Basic salary rupees 2 lakh per month since January 2009.
Sorry?
20,000 per month.
Why you are reading like that? How much is that? 2,000, 20,000 per month.
Yes, sir. Dearness allowance rupees 6,000 per month. 1/3 of which is part of salary for retirement benefits.
Okay, hold on. So basic salary is 20,000. So for the year 1920, what is the total salary, Urmila? Total basic salary.
1 month or full year, sir?
That's what I am asking you. For the year, I am asking for income tax purposes for 1920. How much? One more time, let me ask. For the year 1920, Mr. X should show how much basic salary for income tax purpose.
Mhm. 78,000, sir.
78,000. How did you get that?
Sir, X retires on June 30th.
Very good.
From
So
April, May, June. 3 months.
April, May, June. So 20,000 into
26,000, no, sir.
26,000 into 3. So basic 20,000 and DA 6,000. 20,000 into 3 plus 6,000 into 3. Separately you have to show.
Yes, sir.
Right? Now, one frequent mistake students make in the exams is they will take 6,000 divided by 3, 1/3, 2,000 into 3 they will do. No, that is for retirement tax calculations. That's DA 6,000 only. So 6,000 into 3. Make sense?
Yes, sir.
Right. Continue.
Employees' contribution towards Provident Fund is rupees 3,000 per month.
Hold on a second. Employer is making 3,000 deposit in the Provident Fund. Okay. So I am not giving this 3,000. I am the employee. I am not giving. My employer is putting in the Provident Fund 3,000 rupees. Is it taxable or not, Urmila?
It is taxable, sir.
You can't conclude like that. You should ask in written a question. Sir, is it a statutory provident fund or a recognized provident fund or an unrecognized provident fund? Getting it?
Yes, sir.
I'm trying to help you to think how you should think when you're solving a problem.
Yes, sir.
This is professional course.
Yes,
You have to go very depth into it. Okay, so these are the questions that should come into your mind. Sir, how can I answer if I don't know it is a recognized provident fund or an unrecognized or it's a statutory provident fund? So it is a statutory provident fund. Now, what is the rule? You have taken a screenshot. Check. Is it taxable or it's not taxable?
Wait, sir, I'll check it out.
What, Manisha, what do you think?
Not taxable, sir.
It is not taxable. Statutory provident fund, employer's contribution is completely exempt from tax. Okay? If it was recognized provident fund, then
Excess of 12% of salary.
right, excess of 12%. 12% of what?
Salary.
Salary means what?
Salary plus, but that is basic plus DA, which forms part of the retirement benefits.
Very good. Right, in excess of that will become
Taxable.
correct. Right, Urmila?
Yes, sir.
Right, read the one in the bracket now.
X makes a matching contribution.
What do you mean by matching contribution? What does that X makes a matching contribution means?
Same as in
That X is also depositing 3,000 rupees.
Yes.
Is that taxable? Is it taxable or not?
It is taxable, but we'll get a deduction under Section 80
In which case?
in case of statutory provident fund.
It is in case of statutory provident fund and in case of
recognized.
recognized provident fund. Makes sense.
Yes, sir.
Right. In unrecognized, you don't get any deduction. Continue.
Yes,
Urmila,
sir.
yes.
Yeah. Interest credited at the rate of 15% on April 30, 2019, rupees 7,500. Pension
Hold on.
after retirement,
Hold
rupees
on.
10,000.
Hold on. Interest credited at 15% on April 30, 2019, 7,500. That means what? This guy for that year, for the 2000 year, 2019-20, he got an interest. That means whatever amount was there in Provident Fund for that year, how much interest he got?
15%.
No, 15%. That is 7,500. Is this 7,500 taxable or not? Again, refer to your chart. Anisha.
For statutory provident fund, it is exempt.
For statutory provident fund, it is exempt. For recognized provident fund,
It is taxable.
how much is taxable? Full
Excess of 9.5.
9.5%. How much this guy is getting? 15%. So how much should be taxable? 4.5% should be.
5%.
5.5% should be taxable. Make sense?
Yes, sir.
Right. Continue.
Pension after retirement is 10,000 per month.
Hold on a second. Is this taxable?
Yes, sir.
Urmila.
So, pension, right? I didn't get that, sir.
Revision is required. Revision is required. Last class we discussed pension. Urmila, taxable or not?
Yeah, sir, taxable.
Taxable. How much is taxable? Can you tell me the amount? For the year 1920, how much is taxable? Yeah, Urmila.
So we should know that gratuity also.
Why you should know the gratuity?
For pension, we get the gratuity.
Huh?
For pension, we should know, sir, with gratuity or without
Why?
gratuity.
Which provision says that gratuity has to be? You should know. Revision is required. You have to revise.
Yes,
That is for commuted pension. Did he commute the pension?
no, sir.
No, he did not commute the pension. This is monthly pension, uncommuted pension. For uncommuted pension, it is taxable. Just tell me the amount, that's all. For 1920, how much amount to be taxed?
1,20,000, sir.
How did you get that?
So he retires on 30th June, but pension will be received, no, sir. A month.
From when? So when you are working also, you'll get pension, is it? Unbelievable, Aisha.
No, sorry, sir. I'm sorry, sir. 3 months he'll not get 9 months.
Then unbelievable answers.
90,000.
How much is the pension?
90,000.
90,000.
Yes, sir. That's what I said. 9 months, right? 9
He
months.
said 1,20,000.
Before this.
No, first I told you, sir. Then I realized, yeah, June he got retired. So from June to March, that is 9 months.
Careful. Okay, this is
Yeah.
where you make mistakes. Not that you don't understand. It's just small mistakes we make. Continue. Next one.
And payment of provident fund at the time of retirement is rupees 7,60,000.
Now this becomes important. This is the lump sum amount. So this fellow, when he retired in June, he got a huge amount from the fund. Right? So is this taxable or not? This is the question. Is it taxable?
It's not taxable, sir.
You can't answer like that.
Yeah, yeah. This is depends upon the kind of provident fund.
Yes. What is the kind of provident fund? If it is statutory, then?
It is not taxable, sir.
If it is recognized provident fund, then?
It's not taxable.
Sir, your voice, sir.
If it is recognized provident fund, then?
Not taxable, sir.
Not taxable. If it is statutory provident fund, then? Not
It is no, sir. It is a part of salary. Yeah,
recognized statutory fund, statutory, not taxable. Unrecognized. If it is unrecognized, then?
it is taxable as a part of salary.
No, you can't conclude like that. In that, you need to have a breakup. What is that breakup? Employer's contribution, employee's contribution. Employee's contribution is not taxable. Getting
Yeah.
it?
Yeah.
Because you already paid tax.
Yeah, 3,30,000 is taxable as salary.
3,30,000 is taxable as salary. And then,
Here they have given out of which employer's contribution is 3,30,000, no, sir. And you said this is statutory provident fund.
Then?
Sir, so employer's contribution will be exempt, no, sir?
It is completely exempt. Yes, you are right. If it is statutory. If it is statutory, it is fully exempt.
4,30,000 will be taxable, no, sir?
Nothing is taxable. That is also exempt. Fully exempt. See the chart. Entire amount is fully taxable. Full lump sum is exempt.
Sir.
Getting it? If it is statutory. If it is recognized, also fully exempt. But if it is unrecognized, then?
Yeah.
Then 3,40,000 is taxable. Right, Manisha?
Yes, sir.
Right.
3,40,000, sir.
Now, out of 7,60,000, if employers is 3,30,000, then employees is how much?
4,30,000, sir.
Is it?
So employers is 3,30,000.
Employers is 3,30,000.
Yeah, that is taxable as a salary.
That is how much is employees?
Yeah,
How much is the amount of employees?
3,40,000. It is mentioned, no, sir. X contributes rupees 3,40,000. X contributes rupees 3,40,000. It is mentioned here, no?
But our Udumla is asking 3,40,000 plus 3,30,000 does not amount to 7,60,000.
Yeah, right. That is interest part then.
How much is the interest part there?
They have mentioned interest parts for employer is 44 and for the employee it is 46.
So there, that also, if you add these two, is it coming to 7,60,000?
No. Yes.
Yes, it will come as accountants, as chartered accountants, cost accountants. You are supposed to calculate that and verify whether the total is matching or not. That's our job.
Yes.
What, Manisha?
Yes, sir.
Right. So you are right, Urmila. How did I say it is 3,40,000? Because 3,40,000 is given in the question. Make sense?
Yeah.
So what about the 3,40,000? That must be
Not taxable.
that is not taxable, and 3,30,000 is taxable in case of unrecognized provident fund. Okay. Now issue is with the 44,000 rupees interest. Interest on employer's contribution. Okay, this breakup the PF will give. You don't have to calculate. Sir, how did you calculate? If Urmila asks, then I don't have an answer. Why? Because that's not my job. The calculation of interest is Provident Fund's job. They will calculate and they will tell. I will just follow. Getting it?
Yes.
So that 44,000 is how much? Is taxable or not?
It is taxable under income from other sources.
No way. 44,000 is taxable under salaries.
Yeah, that is employer's contribution. Yeah, employer's contribution is 44,000. Yes, sir.
Don't say employee's contribution. Interest on
Employer's contribution.
Be specific. That is
44,000.
Is taxable under
Salary.
and interest on employees' contribution.
Other sources.
Other sources. Make sense? Done? Read the remaining part. Read the remaining part. Yeah, Urmila.
Sorry, sir.
Yeah.
Salary and pension become due on the last day of each amount.
Each month, that's not amount.
Okay. Each month,
Ah.
X has deposited the entire provident fund payment with a company rate of interest at 9% per annum.
Right. Okay, fair enough. Continue.
Find out the income of X for the assessment year 2020-21 on the assumptions that the provident fund is statutory provident fund, recognized provident fund, or unrecognized provident fund.
Right. So shall we do the problem together? Take a snapshot of this question. We'll do it together. We already discussed this question. Let us take a snapshot, all of you. Now I will do this problem. Okay. So I'm not sure if you guys can see this. I think now you'll be able to see this. So what is the first one? Let me try like this. What is the first one? Basic salary. So what we will do, you will make a big particulars column, and 3 small columns, SPF, RPF, and NPF. Okay, I think I will do it. So I will do it for you guys. So one column is recognized provident fund, the other one is statutory provident fund, the other one is unrecognized provident fund. So there are basically 4 columns. Okay, now one after the other. First we have to show this is possibly one employee only, 3 cases. First case, what is the basic salary? How much is the basic salary?
60,000.
60,000 is taxable in all the 3 cases. We don't care whether you are recognized provident fund or not recognized provident fund. Basic salary must be fully taxed. What is the next one? Dearness allowance. How much is that? Sorry? 18,000. 18,000 is fully taxable. Correct? Next. What is the next one? Pension. How much is taxable?
90,000.
90,000 is fully taxable. Whether you are government employee, non-government employee, or whatever, monthly pension is always taxable. Next. Interest on provident fund. Interest on provident fund. Please remember, this interest is not accumulated interest. This interest is for 2019-20 interest. This is current year interest, not the accumulated interest. The current year interest was how much? The current year interest was 7,500. This 7,500 is exempt in case of statutory provident fund and is not taxable in case of unrecognized provident fund. Why? Because this will be taxed later when you receive the lump sum. Agree? Getting it or not?
Yes,
Or
sir.
Manisha?
Yes, sir.
But what about the recognized provident fund interest? Is it taxable?
In excess of 9.5%.
In excess of 9.5%. In excess of 9.5%. That means what? Into divided by 7,500 minus 7,500 into divided by 15% into 9.5%. This part will become taxable. If 7,500 is 15%, then 9.5% is how much? You are getting it, Urmila? If interest is 7,500 and that amounts to 15%, then 9.5% is how much?
2,750.
That you should
Minus
minus from 7,000. So how much excess?
2,750.
2,750. Is that clear? Yes or not? Done. Next one. Employers. What's the spelling? Employers contribution. Employers contribution. Employers contribution to provident fund is not taxable in case of statutory, is taxable later in case of unrecognized provident fund. For recognized provident fund, we have to calculate. Correct? How much is employer contributing? 3,000. How much excess he is contributing? How much? How much?
12% of the salary, excess of 12% of salary.
So how much?
20,000.
12% of
1,000.
22,000.
22,000.
Agree? How 22,000, Manisha?
That is 1/3 of 6,000.
1/3 of 6,000 also I added. Right? So into 3 months. This is for 1 month. For 3 months I have to calculate. How much is that? So that is 3,000 minus 2,000, 22,000 ka 12%. How much is that?
2,640.
Into 3. How much is that?
1080.
1080. Does it make sense?
22,000.
Sorry?
Total is 26,000, no, sir?
Yes. But see, it clearly says for retirement benefit calculations, the employer will consider only 1/3.
1/3, no, sir?
1/3 of 6,000 is 2,000. Agree?
Yes, sir. 2,000.
2,000 plus basic 20.
Yes, sir.
Correct. Over. Right, guys?
Yes. Now, PF lump sum. Lump sum received PF. What about that? In case of recognized provident fund, it is exempt. In case of statutory provident fund, it is exempt. When it comes to unrecognized provident fund, two things are chargeable: interest and contribution. Which interest you should take? Employer's interest you should take. How much is that? 40?
40,
So,
Yeah.
44,000.
Yes, ask Urmila.
so 22,000, 12% of 22,000 is 2,640.
Correct.
Okay, sir.
This is 44,000. And what about the employer's contribution? 3 lakh? How much? 3 lakh 30.
3 lakh 30.
3 lakh 30,000. This is tax. Makes sense. Manisha, are you getting it?
Yes, sir.
Urmila?
Yes, sir.
Now, sir, but what about the interest amount on employees? That is income from other sources. We will calculate it later. Right now, we are calculating computation of salary. Computation of salary. Done, guys.
Yes, sir.
Right? So, is there anything else left out there? Is there anything left? I think that's it. Compute the salary. Please compute the salary.
So this ATC ka deduction we are not going to do now, right?
No, we are not going to do that. 80
So,
deduction
sir,
is after computing of the total income.
yeah. Shall I tell you, sir?
Yeah, go ahead.
So recognized provident fund it will be 121,830.
121,830, that is perfect.
And statutory provident fund it will be 125,500.
Give me 1 second. How much is that?
125,500.
Okay. 120.
500.
It's statutory. Are you
Yeah.
sure?
Yes, sir. Sorry,
Okay.
sir. Sorry, sir. Sorry, sir. Yeah. No, sir. What is that? 7,000? No, I'm sorry, sir.
What, Manisha? What's your answer?
Sir,
It
for
is 118,000, sir. 1,18,000.
1,18,000.
Yes.
In case of statutory.
Yes, sir.
1,18,000, correct. That is in case of recognized.
4,92,000.
Unrecognized. 4 lakh
92.
and recognized.
1,21,830.
That's correct. What, Manisha?
yes, sir.
What?
Same answer, sir. 121,830.
Somewhere I made a mistake.
Sir,
Hmm.
recognized provident fund I'm getting 1,71,830.
Correct.
And for statutory I'm getting 1,68,000.
Correct.
Then for unrecognized I'm getting 5,42,000.
Come again, ma?
For unrecognized I'm getting 5,42,000.
Yeah.
Sir, we have not taken employees' contribution, no, sir.
Employees' contribution we will not take. Why? What is the logic? You should not take. Why you should not take? What is the logic?
They will allow us a deduction under for statutory and recognized. For unrecognized, we will not allow as a deduction also, sir.
So you have already paid tax on it. You're understanding?
Yes, sir.
You were not allowed deduction now. When you are not allowed deduction, that means what? You already paid?
Paid the tax.
You already paid tax on it. Today, my system is killing me. Not able to present the answers for you guys. Okay. So let it be. So tell me the amounts. So total it
1,71,830.
1,71,000. This is for recognized profit fund.
Yes, sir.
And
1,68,000.
and
5,42,000.
correct. Less standard deduction. How much is the standard deduction?
50,000.
50,000. 50,000 in all the cases. In all the cases, 50,000 is deductible. You can minus it. So this is 1,21,830. This is 1,18,000. And this is 4,92,000. Right, guys? Make sense?
Yes.
चल रहा वीडियो चला रखते हैं यार के फोन ही रखते क्या कर रहे हैं
Give me 1 minute, guys. One lakh 18,000, 1,51,800, and 9 lakh, 4 lakh, 4,92,000. Right, too good.
So can I see the question once?
Yeah.
I have not taken a screenshot.
Yeah, give me 1 second. Right. This is your question. This is your question. Take a screenshot of it. Okay. Now, as far as the answer is concerned, this is your answer. The total salary income 1,18,000, 5 lakh, 1,51,800, and 4 lakh. It's not 22. That is how much? 4,92,000. That's not 4,22. That is 4,92,000. Okay. Right now, this is income from salaries, right?
So from this salaries income, you add the other sources income. How much is the other sources income? Other sources income is 46,000. Correct? Then 46,000 plus this guy has deposited this 7,40,000 in company deposits. So the company is paying him interest. Remember the last sentence in the question. 7,40,000 into 9%. For how many months? For 9 months. So calculate. This is income from other sources. This 46,000 in case of this 46,000 in case of the 40 in case of non-recognized provident fund plus 51,300 other sources interest in all the three cases, right? Now this gives me the gross total income. The gross total income, I think the totals are off. So what is the gross total income? Okay, yeah, and with that we also have what? Standard deduction also we have, sorry, ATC deduction also you have. ATC deduction, how much you will get? How much you'll get ATC deduction? That's your answer, right? So how much is that? Gross total income of 2,19,300. Is that correct? Gross total income went wrong. Gross total income will be 1 lakh. How much it will be? Gross total income. Calculate the gross total income. Please add the gross total income here. Nisha, you're following it?
Yes, sir.
Gross total income is 1,69,300. Okay, why? Because we added the interest amount. Okay, how much interest we added on company deposits? How much was the amount? 7,60,000 into 6%, 9% for 9 months only from July onwards in all the three cases. But in case of a non-recognized provident fund, we added another 46,000, which is interest on employees' contribution. That also we added, right? That's why non-recognized provident fund income is very high. Then you have ATC deductions. ATC deductions. How much you contributed to provident fund in that year? You contributed only 3,000 rupees per month for 3 months. You contributed. That means 9,000 rupees. You get ATC deduction in both the cases. Recognized provident fund and statutory provident fund, and that is your total income. Make sense, guys?
Sir,
Done.
taxable salary for recognized provident fund is 1,21,830, sir.
How? Which one?
Recognized provident fund, the total taxable salary 1,21,830, sir.
How?
So we calculated it, sir.
Where did I make any mistake anywhere?
Is there calculation?
Recognized provident fund, is it? Recognized provident fund total salary income is how much? It went wrong here.
1,21,000. So this becomes 1,71,000, is it? Correct? Yes? Yes or not? 1,21,830 plus 51. 1,72 or 73 or
73.
73,130. Correct? Yeah. Is this okay now? So total income will also change. What's the total income now? I think total is fine, huh?
Yes, sir. 164.
Right. That's correct. This is your total income answer. Okay. Make a note of this or keep it handy. So I have shared a workbook on salaries. You can freely solve all those problems. Okay. I think I have to share answers with you, as she has said. Aisha has told today I will share the answers. I think it slipped out of my mind. And one other important problem you can solve is this one. Okay, this problem which is there in your. You don't have to make a note of it. Okay, Mrs. X, 63 years old, executive in Delhi. It is given in your note, workbook note. It is there. Okay, solve this problem. Share it. At least this problem is very important problem. Please share it. Share your answer there. Okay, it will really help. Right?
Yes, sir.
Right. That's
Sir,
all.
can you please again show this question? My mobile has some issue. I couldn't take the screenshot.
The
The
one we
question
solved
we
now.
solved now.
The question.
Yes, question.
There you go.
Now I do. Thank you, sir.
Right, guys. That's all we have tomorrow. Today, tomorrow we are catching up at 10 a.m.
Sir,
Okay,
so
morning. Sorry.
So I have one doubt. November exam, the tax slabs are 5, 20, and 30%, sir.
5.
20% and 30%. It is according
Yeah.
to me.
Tomorrow we'll discuss the tax slabs. Okay. Tomorrow 10 to 12 you have my class. Morning 7 to 9 you have Sai sir's class, law class, and 10 to 12 you have my class tomorrow. Stay tuned. Okay.
Thank you, sir.
Right, guys. Take care then.